Good evening, folks. This is Brian Axelrod Mitchell from Trade Algo. I will be guiding you today on a video on how to use, in my opinion, the most important part of the options chain, or excuse me, the platform, which is the flows. There are other services, I'm not going to mention their names, but there are other services that charge exorbitant high prices for the information that you have here at your fingertips. So I'm going to walk you through it and go over a few things first. Today is April 30th, 2025. Now, I start with the date because I want to acknowledge the environment that we are in. Most people, as of right now, are very frustrated because the market is moving, but moving in a very fishtail kind of way, very difficult to trade. So it's not how much the market's moving, it's how the market is moving that's more important. All right, so first off, it's worthwhile to acknowledge that right now is a time in history where the volatility is high. All right, and I'm going to get to why that is important. Because a lot of people think the market's moving, we should be trading no matter what. The market is the same no matter what. That's like having a fast car and trying to drive the same at 1 in the morning with zero traffic on the road, where you could take a lot of risk and drive faster, and trying to drive the exact same fast car, say it's a Lambo or a McLaren or a Ferrari, in bumper-to-bumper traffic. Being like, you have gas in the car, you should be moving. It's not the same, right? You cannot drive your car in the same in just different environments. This is a high volatility, very, very news-based environment because there's so much uncertainty with the tariffs that is currently going on with the 47th president as of today, 2025, April 30th. There's been 2 times in history, ladies and gentlemen, where the volatility index has been elevated this long. 1, the Great Depression of the 1930s, and number 2, you guys guessed it, COVID. COVID-19 during 2020, about half a decade ago. The volatility index stayed elevated. Now, it's nice that right now, as of the 30th of April, it's in the 25s. It's still a little bit high because a lot of people are asking, okay, so when is it easier to trade? When are we going to get more alerts? The simple answer is sub 20. If we can start getting daily candle closes below 20, we're going to have a normal market where we push alerts the way we used to. But again, it's difficult to trade for this reason. Now that I've given you the groundwork, the premise, the reason why it's difficult, and showing you the chart of the VIX, V like Victor, I like India, X like X-ray, this is your leading indicator to know, are we still in the crappy environment, Brian, or are we not? Is it below 20? You can answer your own question, right? So if you're a lot of people are getting frustrated, and it pains me to give them answers they don't want to hear, so I want to address it without beating around the bush, without any of the BS. And here's why this is important, right? The environment. Because if we go to the volatility, if we go to the, not volatility index, but the options chain, and you should be looking at the options chain, and the key word is should. I'm not going to tell any sovereign being, an adult capable of making other individuals what they should or should not do, but a good trader that is a profitable trader that is looking to minimize risk, that is taking responsible trades, should every time they open a trade look at the options chain. Let's just say we want to make a trade on Carvana. I'm just making a random ticker here, CVNA. Let's click on that. Again, that's here in Trading Tools, options chain. You're going to see that the difference between bid and ask is very, very wide, right? Now this is the bid, which is probably the price you're going to sell for if you want to sell your contracts, and the ask, and this is the price that you're typically going to buy your contracts for. So Brian, you're telling me that if I buy a contract at $4.60, which translates into $460 of premium for one contract, let's just say I change my mind 10 seconds later You're telling me that I'm going to basically lose close to $100 that I'll basically sell for $345? Yes. Do you see why we don't like, this is called a spread. The difference between bid and ask is called the spread, right? So you can see that the spreads are very wide, granted the environment, because of the high volatility. So sometimes I see a lot of trades in the morning, guys, that I typically before this Trump tariff trade war situation, I would have given you guys in day trade with Brian Chad, boom, 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 just giving you a lot of trades. But it's not that we don't want to trade. A responsible trader is going to say, okay, let's trade some Carvana. Whoa, that is a big spread. That is an 85-cent spread. If I change my mind 10 seconds later after purchasing this for $460 premium and say, whoa, 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 it looks like they're selling, this is the price you're probably going to sell for. Not the price you got it for. You're probably going to have to sell for an $85 loss, even though we held the contract for 10 seconds, a minute, whatever it is. Let's just say we got into it by accident and I've missed some conflicting piece of information. So this is reason number one why it's difficult to trade with the spread. Spreads widen typically during high volatility and with options with lower liquidity, right? Less people trading them. Just to keep things short and simple, I'm not going to get into a very detailed version of what the options chain is and how it works, but you typically want to go for contracts that have a very short spread, thin spread, not wide spread. Case in point, let's take a look at obviously SPY. SPY and the indexes are going to have a very tight spread. And even still, SPY, the spread used to be 2 or 3 cents. This is a testament to the high volatility. It used to be 2, maybe 3 cents. Now it's a whole 8 cents, a whole $8 that in slippage that you are going to lose in case you want to hop out of the contract a few seconds later. You're going to lose some money due to this high volatility trade war. Good news pumps the market, and then it might throw off your technicals, and bad news dumps the market. Since nobody has a crystal ball in this market, we never know what the president or Besant or China or we never know what any of these people are going to say during this time where everyone's heightened emotions, scared. It's difficult to trade with the wide spread, guys. Now, I mention that because I'm going in chronological order, because this is important when you look at the flows, right? Flows are still options contracts, and flows too. They're just option contracts. The big money, the billionaires, banks, and hedge funds are buying. They too will have wide spreads. So you want to, let's just put it this way, you want to check the spread first and foremost, right? You don't just want to, they are buying a lot of these contracts, let me mindlessly jump in. That's not the way it works, guys. You still have to follow some rules. You want to protect yourself, just like, you want to wear some knee pads if you're not confident on riding a skateboard for the first time, and a helmet if possible, right? This is your knee pad and helmet for buying contracts, especially during this time period, right? So, I want to start off with that. I don't want folks losing money. I don't want people coming back to me and saying, hey, Brian, what you said, I want you guys all to be safe. I want you guys to make money, but at the same time, equally important, I want you guys to save money. All right? So, and I do believe in repeating things, and that's how it sinks in. So again, it's tough to trade during this time period because the volatility is too high, because of the environment, because of the time period that we're in, and the new changes we're going through. Therefore, making the spread, the difference between bid and ask on the options chain here in trading tools, slightly widened. So you want to make sure not to just mindlessly jump into contracts. You always want to check the options chain and then move forward, right? You always want to make sure also, are they affordable or not, right? Purple is in the money contracts, so you can see the price of SPY is 55932. We already passed 559, so these are all in the money. We already passed 555, 556, 557. Out of the money means we have not passed the stock price. So all the white on the Trade Algo platform are out of the money. Typically, the further out of the money you go, the more risk you're taking. Why? Because we buy contracts with the intention of wanting to go in the money. If you buy the 561s, at some point in the day, you want your contracts to turn purple on this trading tool. All right, so the trading tool again is right here when you log in, options chain. The goal, the intention, what you're trying to do when you pick a contract is you want to go in the money. You want the stock price to pass your strike price. If we buy the 561s, at some point you want it to say 561.01 or higher. All right. So I'm going to include this as well. This is called the options flows guidelines. Brian, this is more work. I just want to pick contracts. I mean, even professional football players play by a set of rules, right? They don't just play without, following any rules just because they want to make money. Even professionals that are good at what they do, they still follow a set of rules, right? So this is just in case you guys want to do it on your own. Of course, I do have a flows channel, and if you guys want to enter that channel, live sessions, day trade with Brian, the instructions are right here. Please be sure to read them thoroughly because people skip the last part. It says if you have not received the email after filling out this form, please reach out directly to support. And I'm always reminding folks, have you reached out to support? And they haven't. Support is right here. They're always here for you. They always try to get people back to people in a timely manner. So just go to the support, email them. They'll get back to you as soon as they can, usually within the same day, within a 24-hour business day period. All right? So moving on, I think it's worthwhile to say most traders start using our platform are typically they're lost, they're overwhelmed, it's too much information. I think this is my bread and butter. Of course, everything has its purpose, just like a car, just like a clock, all the wheels and springs all serve a purpose. But I think this is the meat and potatoes of the Trade Algo platform, in my opinion. It's just an opinion. You guys can maybe use the dashboard confidently or the dark pool prints confidently like Eric does. He's phenomenal at it. He's fantastic at it. I think he's the best one at Trade Algo. A very close second name. But for me, the flows are just, they're beautiful, right? First and foremost, I want to add, and you guys can have access to this on your own, but first and foremost, it's worthwhile to state there is no such thing as a crystal ball. I cannot tell you how many of you guys email me trying to shake the crystal ball and say, Brian, tell me what to pick so that I could just get in and make a lot of money. There's no such thing, guys. There's no such thing as a crystal ball. All right, so I hate to burst some bubbles, but we say it in our sales webinars. I'm going to tell you now. I'm going to tell you again. I'm going to say it in my live streams. There's no such thing. Stop trying to make Trade Algo or this indicator or this. There's no such thing as crystal balls, guys. Right? A lot of members try to use the dark pools and options flows as a crystal ball, and that's how you lose money, trying to predict the market using this or that, or, please don't do that. Having access to what billionaires, banks, and hedge funds in terms of options contracts is nothing more than a huge competitive advantage to the retail trader, and I'm going to show you why. All right, and I say this again, not to disparage anyone or make anyone feel bad or shame anyone, because people take what I say objectively true with a negative connotation, unfortunately, but just know I'm overtly stating as a disclaimer kind of thing. I don't want to make you feel bad. In fact, it's the opposite. If I make you feel bad, you take that with your trading, then you get frustrated, then you make bad trades, then you lose money, then you start romoing and FOMOing because you made a bad trade, you try to revenge trade and make it back. I start an avalanche of things, but sometimes hearing a direct truth about the market that's not flattering makes us feel a certain way. So if it does, I'm just telling you, it's not with the intention of making you feel bad. It's just an objective, unflattering truth about trading. That being said, let's just get on into it, all right? But it is just a competitive advantage, no more, no less, all right? I'm going to post this in the description of this email, and we'll move forward. So here's what I do, guys. Dashboard, trading tools, options chain, we'll get to that. I'm going to leave that tab open. Live options. These are all the contracts that the billionaires, banks, and hedge funds are buying. Sometimes it's a billionaire hedge fund, right? And they're just buying $1 million in contracts. That could be a hedge, right? That could be a little let's just gamble. If we lose $1 million, it doesn't matter to us, all right? So you can't look at any of these premiums that they're buying, $1 million worth of contracts in Shack, whatever that is. I think that's Shake Shack, right? The burger place. Yummy. I look for something significant. 171,000 to a billionaire or a bank or a hedge fund, is that a lot of money? No. To us, it's a lot of money. But you have to consider that this is especially not a lot of money because remember, SPY is the most liquid in the stock market. It has a lot of money. So for SPY, Qs, IWM, that are more liquid, this premium has to go up tremendously. The less liquid, like Shack, I don't trade that at all typically. This might be a little bit more eye-catching, right? But I think I'm getting a little bit ahead of myself. This is exactly what the platform looks like when I come on board. I don't really pay attention to any of this, all right, because I get questions on this a lot. It's not to say that it's useless. I just want to simplify things, right? Keep it stupid simple and everyone's happy, right? So it's not to say that it's useless or why is it on there if you don't use it. I like to keep things very simple so that you can replicate it. If you start complicating it and you're juggling too many things, then it is worthwhile for confluence. And if you use it long enough, you'll start seeing a pattern with the trades that you're taking. But for the purposes of this video, trying to make it as easy for everyone to follow, even a 5-year-old can follow, we're not going to focus on that. So I'm saying that from the beginning so that we don't get confused or get too many questions on that. First off, right now the minimum setting, this filter, is 35,000. So will $35,000 in premium show up if they buy 10 contracts, 20 contracts? Yes, right? Also, this is like roughly around over 2 years, or this is 2 years basically, right? This filter right here. So right now the setting is for 2 years if I leave it alone. And the minimum amount of contracts, 0 for now. So the first thing I do is I want to see what's coming in relatively soon. I don't want to know what's out 2 years. I'm not looking to buy leaps. Leaps are contracts way in the future, right? I want to see what's basically coming in the next month, month and a half, 2 months maximum. So there's no exact figure that I have for this. It could be 60 days. I don't care. I just want to see what's coming in near. I'm a day trader. I want to day trade something, right? So let's leave that setting for 50 days. Even if it was 30 days, I don't care. I want to see what's coming in near, soon. What is the big money buying now in the near future, right? So let's leave this setting the way it is. It could be 30, 40, 50, 60. Relatively near is the goal because people get way too concrete about this. Secondly, 35,000 contracts. We can leave that alone for now. You can start messing with this a little bit later, but typically I'll want to see at least, actually, for the purposes of this video, this is contracts. Let's leave premium alone, which is this column right here, and let's actually mess a little bit more with the contracts. Typically, a speculative flow is still 5,000 contracts or less. I think anything over 10,000 contracts is significant, but 5 to 10,000 contracts is still worth looking at because, again, if it's a less liquid ticker, it might be worth looking at, right? So the amount of contracts for now, I usually set it to around 4,000 or 5,000. So again, it doesn't have to be exact. I think Dane has his around 2,000 or 3,000 because he likes those speculative flows that come in. Because sometimes, say 3,000 contracts for something with a very, very low liquidity like Lyft or SoFi. I think that's how he found the SoFi calls, right? I just like to cut to the business and go a little bit heavier. I want to see what's coming in that's significant, right? Now, a lot of people ask me constantly, what is the AB, what is the LB, what does the LA mean? And again, it's in here. We're not going to go over every nook and cranny about what is what, but this is very simple to understand. BB typically means the options are being sold. AA means that they are buying contracts above the asking price. Let's go back to our options chain. There's a reason why I went in chronological order, right? Back to trading tools, options chain. So if they're buying for the maximum right here, the maximum is 216 for the 481 QQQ calls, right? They're buying above the top price you can get. Doesn't that mean that they should have confidence in that? So if I see something AA or at least at the ask, that typically means that it signals more aggression because they're willing to purchase at the maximum price or above the maximum price, right? LA and LB, you can assume these contracts are what they are. You know, they're not aggressive, but if you see LA or LB, leaning bid or leaning ask, that just means they're buying 528 puts, right? Lean ask. Now, I don't care about LA, LB, or AB. You can hover over these if you want to, and it says you're purchasing at the bid, price filled at the bid. So what I do, once I have these settings, okay, I want to see what's coming in near, and I want to see a significant amount of contracts being purchased. You can see that 11,000 contracts, 11,250 SPY contracts were purchased here, right? 6,000 contracts were purchased here. I want to see which are the most aggressive, right? You want to see, okay, it's nice to know everything that they're buying, but I want to see what's coming in above the ask. I want to see what's coming in at the asking price. What are they paying maximum for? That basically signals conviction. That signals if they're aggressive about something, they must be confident about it. That's the logic, all right? So let's go back to our filter, and you have filters up here, guys, all right? I want to see everything above the ask, especially AA. See how everything AA came up? And I want to see things that are at the ask. So now we should only see A at the ask and AA above the ask. I don't want to see any of the ABs, LBs, LAs. Sure, can those hit? Yes, of course, right? But I want to see the most aggressive contracts that they are personally purchasing. Does that make sense, guys? So, the next thing, again, back to the options flows guidelines. Once you know what that is, I also choose not to look at the most 4 manipulated stocks on Wall Street: GameStop, Chewy, AMC, and Donald J. Trump. They hate that. I mean, they hate this guy and they hate Roaring Kitty. Anything he touches, like GameStop and Chewy and AMC, when I see those flows, I just completely ignore them. I also choose not to play metals, commodities, ETFs, banks, bio, pharma. Why? Because they're higher risk, they're higher volatility, right? I also choose not to look at any of these stocks: HYG, FXI, KWeb, so basically ETFs. It goes back to the same thing: EEM, EFA, TLT, EWJ. So I typically, let me actually put those in here. There's a couple in here that I actually don't watch as well. EEM is in there. Okay. IYR, LQD, got it. Okay. So typically, I already have these memorized, but enough repetition, you guys will start noticing the same thing, right? Whoops. That's another browser. So let's exclude a few of the tickers that I just know that are, to me, they're worthless. Absolutely worthless. EWJ, TLT, what others? KWeb, LQD, and that should shorten your list a little bit, all right? Now, IWM, SPY, the popular stocks, again, those are super, super liquid. Yes, the spread is going to be tighter on those, but 6,000 contracts, again, under details, the number of contracts show before, at what price that they bought it for, is not a significant amount of contracts. Let me show you. Hopefully TradeGPT doesn't let me down on this presentation because I'm giving it a lot of confidence right now. How much liquidity does NVIDIA trade in a single day? $236 million shares, ladies and gentlemen. That's a lot of volume, all right? So is 236, does 600,000, is that significant compared to 230 million shares traded a day? No. So I understand that there's 6,000 contracts here, but relative to NVIDIA, so let's just put it nice and simple. So what do you want to see for the popular stocks, Brian? The number of contracts. Anything above 15,000 will do. Let's just put a nice round number on it. 15 to 20,000. If I see something has 30, 40, 50, 60,000 dollars bought into it, I will start start looking at it for sure. All right. So IWM puts came in, but again, IWM is one of the 3 ETFs that are indexes that are super liquid. SPY, QQQ, and IWM. So S&P 500, NASDAQ, and the Russell, those are very liquid. 6.8 million is a drop in the bucket, right? So yes, I like that it's 40,000 contracts coming in, but again, you also have to look at all of these are important. So basically, we're making sure that the stars line up. We want to see a high number of contracts. Let's just call that number 1. We want them to be relatively near dated, right? So pretty much everything on here is going to be near dated, but the nearer dated they are, the better. I'm not a swing trader, so I don't want to see things that are 3, 4, 5 months out, right? So that's number 2. Number 3, we want to have a high premium, right? But again, 3 and 4 are linked, which is basically, is 3 big or does it just look big? So is it big relative to the ticker, or am I just like, oh, 7 million? I hope this is making sense. I'm trying to phrase it in a way not to lose too many people. So 7 million, if this was, let's go back to Shaq, if this was 7 million going into Shaq, I would be very interested. I would be, oh my God, my tongue would be hanging out. Oh my good, I'd have stars in my eyes. But it's not Shaq. It is IWM, one of the most liquid stocks that there is, right? So I really wouldn't touch that, right? So it's all right here in the guidelines. I'm just going over it so that it's a visual representation. Obviously, you want to grab something out of the money, right? In the video that I gave you guys not too long ago, the intention of buying contracts is you want to pass your strike price. So if we are currently at 98 on ABC stock, 98.08, and here's the 100 level, and this is the strike that you bought, you want to pass your strike price and eventually get in the money to 101, 102, hell, maybe even 110, right? 120, 140. But you will always want to pass your strike price if you're buying the 100 strike calls, right? The intention is always to go in the money. Now, if you see out of the money contracts for the flows, that's fantastic. But let's just go back to our example. We're at 98.08 stock price for ABC, and you see a flow come in that's 40,000 contracts, which is awesome. You see that it's 8 million in premium for, I don't know, SGQ stock, whatever that is, and you're like, well, that's not an index, that's not a popular stock, so that's significant, awesome. Your mouth is watering a little bit because the stars are looking like they're aligning, but then you see, and it's relatively, near. Let's just say it's 5.2, so you're like, whoa, they must be really confident. But then their strike price is 140. Now, if we're at 98.08, what is the probability that we're going to pass the strike price of 140? I'm going to give you a moment to answer that in your head. If we're at 98.08, what is the probability if May starts tomorrow, since today is the end of the month, what is the probability that we pass the stock price of 140 in 2 days? Correct. Not very high. So super out of the money contracts, I don't pay attention to. The stars were starting to align until, so kind of a no-name ticker, relatively soon, large number of contracts, huge amount of premium, but the strike price just doesn't make sense. To go up basically $42 or close to just doesn't make any sense, guys. Right? So you have to keep that in mind, is what I'm trying to say. You have to keep that in mind. You want the stars to align, right? You want the ticker to be right. You want it to be relatively soon. You also want to make the strike prices believable, that it can go in the money. You want to make sure the contracts are high and the premium is high. And if all of these align, then we have a trade. Does that make sense? So I already showed you guys how to do the settings, right? And we're going to go kind of pick these apart a little bit right now together. So IWM, super liquid. Love that it's 40,000 contracts. But IWM is currently at 194. All right. So if we're buying puts, 180 something out of the money. So that's good. That's awesome. This is awesome. But again, you also have to make sure you know what's going on in the market. They bought these before they knew what the earnings for Microsoft and Meta were going to be. Microsoft jumped up to $420, and it ended today at $395 something. So this looks like a gamble, right? This is a complete gamble, and since IWM is very liquid, $7 million might be a gamble for a billionaire hedge fund ahead of earnings before they know what they are. So if we didn't have earnings ahead of us, this would have been gorgeous. But understanding the environment we are in, you would say, well, they don't know what earnings are going to be, right? So this looks more like a gamble to me. If we didn't have earnings, I'd be a little bit more inclined to be like, they know something we don't. 40,000 contracts of out-of-the-money puts relatively soon, they know something. But again, since earnings were around the corner, and it's not a lot of premium relative to a very highly liquid ticker, not so much, right? Now, again, we want to see things that are 10, 15,000 contracts that will grab our attention, but 20,000 or higher is what we're typically looking for. ASTS, okay, not a popular stock, not a high liquid ticker, but not above 10,000 contracts. So does that mean that this is worthless? I mean, it's not even $1 million in premium, so the premium's not high. And again, the things you're really looking for is in the document here. You want to make sure that you are grabbing something out of the money. Super out of the money flows I ignore. We also do not focus on in the money contracts. Obviously, if you can find confluence on the charts, that's what I would suggest for this. It's not to say that it's worthless. I mean, they're buying 7,500 contracts at the asking price for a reason. Let's just say this is out of the money. This makes sense. And it's near dated, so next week this makes sense. This could make sense. 8,000 contracts of anything is still pretty high relative to a ticker. I call these no-name tickers, right? The premium is a little I'm not going to give it an X, and I'm not going to give it a check mark. We'll just give it a kind of whatever face. I would probably look at the charts on this one. So let me see. Let me take a look at the charts. I'm just going to try to make this a little bit comprehensive. ASTS. It's out of the money. Okay, so $23. That's good. Looks like that support was broken, so I can't use that. I haven't checked this chart in a while. Looks like it has a weekly demand zone. That's good. And it looks like it's pushing up from the 50 simple moving average, so it could push up from here. It's possible. Let me see if I can find some other confluence. 1 week. Daily. It's kind of moving sideways on the daily. 25 is roughly right here. So we want to pass our strike price of 25. Is there anything on the charts that tells me that we're going to move strongly towards 25 or pass it? Maybe. Let me see. This could be a bullish ascending triangle. Right? If you were a patterns person, right? I need a little bit more than a pattern. But this could be a possibility, right? Where's my bull triangle? Where are you at? A bullish triangle, there is a top, and then higher low, higher low, higher low, and we keep on testing the top multiple times. It could be breaking out, right? I didn't draw this exact to scale, but you guys see how that we keep testing, 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 testing with higher low, higher low, higher low. This could be a bullish triangle. Now typically we move at least the length of the triangle. So if I put the length of the triangle up here, past the breakout, it's not a stretch to imagine that we're definitely going to pass 25. So I can see why. I can see at least some logic behind the 25, these contracts here. But again, not 15,000 contracts, not a ticker I'm familiar with. I'm going to let that one go. It's up to you if you want to play with it, right? But let's see. Flows slightly out of the money and near dated are very likely to hit. Those are what we're looking for. Also, I like when there's sweep and block orders. That signals that they're buying. Sweeps typically mean that they're buying on every exchange they can get their hands on. Block orders typically means they're buying everything on their exchange, right? So it signals more aggression. Like I started at the beginning, more aggressive means they must be confident in something. I like when big money's confident in things. So we want to see things that signal conviction and aggression. I already went over LA and LB. I typically don't look at that. I never buy using market orders for reasons specified at the beginning of the video, especially during now. The difference between bid and ask is wide, and especially now it's wider during this trade war. You always want to set limit orders slightly under half the distance of bid and ask, but if the difference between bid and ask is very stark, very wide, very big, leave it alone. There are tickers that I don't play. Like I said, we did kind of leave those out. But I want to find you an example before we kind of wrap things up. Now that you know what to look for, you want to look for near dated. You want to look for large number of contracts. You want to look for high premium, as long as it's high relative to the ticker. And you want something near dated, assuming that there's no news around the corner like earnings or CPI, PPI, FOMC. You still have to mind your environment, ladies and gentlemen. So popular stocks, like I said, I don't really take a look at. 600,000, drop in the bucket for NVIDIA. 500,000, drop in the bucket for NVIDIA, especially when, remember we looked at it together, 236 million shares are traded in liquidity on NVIDIA. $500,000 in contracts is nothing. So relative to NVIDIA, ARK, hey, 15,000 contracts, but it's an ETF. Very, very liquid. 8 million. I don't know. Maybe look at the chart. SPY, 10,000 contracts. But again, this is the most liquid ticker. Like I said, we want to make sure we're buying 20, 30, 40,000 contracts, right? So this is typically the first column I look at. Is there anything in the 20, 30, 40,000 column range? NVIDIA. This one's grabbing my attention. NVIDIA. So let's go through the list together, right? I typically don't like popular stocks, but let's just say for this example I do. Okay, it's near dated. It's a couple weeks away. I could deal with that. 21,000 contracts. That's looking good. So two things looking good. Premium sucks. And what is the price in the video right now? 108. What is the probability that it's going to dump so hard that it goes under 65? Not highly probable. So this looked good, this looked good, this looks like crap, this looks like crap. Remember, we need the stars to align, right? Near dated, believable that it can go in the money, high number of contracts, because if you're buying 40,000 contracts, you must be pretty certain. You must know something. You must have some news in your back pocket, insider trading, I don't care what it is. But if you're buying 6,000 contracts, not a big deal, right? So high number of contracts and high number of premium relative to the ticker, right? Also, contracts under 10 cents, I don't think I have it in the guidelines document, are 1,000% gambles. Why? Because anything under 10 cents or around 10 cents appreciates or depreciates extraordinarily quickly. So I stay away from things that are around the 10 cents or under. So that one looked like crap. I liked how many contracts it was, 21,000, but the stars did not align. Moving on. Low number of contracts, low number of contracts. 10,000 contracts looks like a big deal, but NVIDIA, 73,000, not a big deal. More indexes. I don't really care for indexes. Remember, I don't look at GME. Big money, billionaires, banks, and hedge funds hate those four stocks. GameStop, Chewy, DJT, and AMC. So moving on, speculative flow. Hey, here's the one that I gave in the telegram. Let's make sure that the stars align. All right, SMCI. Hello. 40,000 contracts, but at the asking price. I like that. 4.6 million in premium. Let's take a look at the ticker. Is it SPY or Qs or NVIDIA? No, it's not. That is pretty significant relative to the ticker. So I like. Stars aligning so far. Is it out of? Is near dated? That's very good. Is it out of the money? Let's check. 35 strike price. SMCI. Whoa, 35 strike price. I like that. Cool. So is it believable that it can get to here? I mean, here's a high, rode up there, rode up there. If we ride back, is it possible that we get above 35? Absolutely. Absolutely. So it is slightly out of the money. Not so absurdly out of the money that it's not believable that we can go in the money. So that's looking good. All right. We have something, right? Calls, 39,000 contracts. So if I can find some technical analysis on this, this is winner, winner, chicken dinner. All the stars are aligning, guys. Check this out. All right, so let's go back to SMCI. I like that flow so far. Everything is aligning. Now, what I found here was a weekly support that it's bouncing off of, right? And I go over this in my daily live streams. So you can see here, red week, and then a huge pivot right there. So there's a support. Every time we get close to this support, we bounce, 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 bounce. So we're bouncing, right? 28.53 would be my stop loss. We have 2 weeks to let that cook. 5.16. Yes, we did have earnings around the corner, so that's why I chose to day trade this one more than swing trade this one, as you guys obviously can tell. I didn't stick around too long. I only left runners or contracts, whatever. It's a nice uptrend on hourly. Probably will get rejected at this 10 simple moving average. It's not terrible volume. It is increasing a tiny bit, but I do like the fact that it is testing close to a weekly support, and it's on the way up, and it has historically bounced higher, bounced higher, bounced higher from these levels, right? So I can find some confluence here on the charts, but since the stars aligned nicely with everything here, that's why I selected that one. Does that kind of make sense, guys? So another one would have been here, 58,000 contracts, but again, is 7.4 million big in reference to IWM? It's noteworthy, but I would like to see something 10, 20, 30 million, right? That's out of the money, near dated. Now for IWM, since it has 0 dates every single day, this is somewhat near dated, right? So you have to look at all the moving pieces, right? SMCI only has weekly contracts. We can only grab expirations on Fridays. So this is 2 weeks out. So two expiration days, 2 ticks out. IWM, this is quite a few, expiration dates away. So, it doesn't look as juicy as SMCI. The stars align more here. I can find some things on the chart. That's why I shared it with you guys. All right, I'm gonna see if I can try to find one more that kind of makes sense. Google, yeah, I like that it's above the ask. I like above the ask more than at the ask. But for Google, not even 1 million in premium. You're gonna have to find something on the charts to maybe scalp this. And is it near dated? Not really. That's not even next month. That's beyond next month. So, again, the stars have to align. And I don't want to sound like a broken record. I think I've stated enough. I think you guys have written it down. Hopefully, if you guys are taking notes astutely, the way I know all of you smart individuals do. And that's pretty much it. That's the only one that stuck out, right? I did like 50,000 contracts on IWM. I mean, those would have paid. Those were bought 1 minute and 52 seconds into the market open today. And if you saw 50,000 contracts, hey, premium is 10 million. Somewhat near dated, out of the money. These would have paid this morning. I just, for whatever reason, didn't look at the flows this morning, and I was just more focused on technical analysis than flows. But even if you were going just off the flows, and this is the only thing you look at, and you're just making sure that the stars align, that near dated, out of the money, believable that it can go in the money, so not too far out of the money, large amount of contracts, large amount of premium relative to the ticker. If the stars align, and especially if you can find something on the charts to show you how you can get in the money, winner, winner, chicken dinner, guys. But these are pretty much the only two contracts, the 50,000. I mean, if you're buying 50,000 contracts of IWM and you're dropping 10 milli, you kind of know something, right? And SMCI, where you at? Where is SMCI? Also, IWM, 31,849 contracts. Not as significant as the one, but these two are very similar, and they're coming within minutes of each other. These both would have paid. Obviously, this one would have paid more. There's a heavier amount of contracts, heavier amount of premium, a little bit more closer to in the money. So yeah, guys, it's pretty simple. If you can make the stars align, especially find something on the charts and make sure that news is not going to get in the way, that's pretty much what you're looking for. So every now and then, give this a refresh every 10 minutes or so and see, did anything significant come in? Well, 40,000 contracts, I wouldn't jump in on those because earnings were literally 2 minutes after they bought these, so these are probably going to get smoked tomorrow. But typically, if earnings wasn't today after market, I would have definitely jumped in on these for sure. All right, guys. So hopefully that makes sense. Again, I'm sorry for making this video so long. It's just that I have to include as much information as I can because there are experts at the market watching this, intermediates watching this, and super newbies that just YouTube how to buy a call or put, and they barely know how to tie their shoelaces together. So I have to make this as comprehensive, simple to understand for all walks of life. I hope it made sense. If you guys have further questions on it, you guys know my email and how to reach me, brian@tradealgo.com. Just my first name at the name of the company at tradealgo.com. This will be in the description. And again, I didn't go into explicit detail, but I would definitely read this a few times. Don't just read it once and acknowledge and nod your head and say that makes sense and then not read it again. The way you remember information, ladies and gentlemen, is repetition. The way you remember information is either a strong emotion or repetition. This document is not going to give you any strong emotions to burn it into your memory, but if you repeat it enough, everything I said in this video will start to click, make more sense, become more second nature, and it's like riding a bike. In the beginning, you're kind of rickety, you keep falling over, you don't know how to really get the mechanics right, but you do it enough times, you start doing it effortlessly, seamlessly. Watch this video multiple times. Again, the way you remember information is repetition, repetition. I've repeated myself very often during this video. I'm sorry about the cat, guys, but he likes to let me know it's time. It's time to eat. Anyway, always trying to please people and cats. Anyway, that's it for me, ladies and gentlemen. I hope this video helped. I hope you guys come in the chat and tell me in live sessions, H2 and Brian, hey, Brian, did you see those 50,000 cons come in on Carvana? And then I'll be, no, I didn't. Let me check it. Oh, yeah. And we can help each other, right? I'll still provide them in the flows channel the best I can, right? And again, the instructions are here. Please make sure to follow all the instructions. If you don't want to look at it yourself, but it was pretty simple to find that SMCI flow, and if I paid attention in the morning, those IWM out of the money puts, 50,000 contracts, just insane, right, guys? All right, hope this makes sense. If you guys have any questions, email me, and that'll do. Have a wonderful and blessed rest of the day or evening, and I'll see you guys in the next one. Everyone, take care.